Tesla, the electric vehicle giant, is showing signs of a potential swing buy entry. This isn't just another little shift in the stock price. We're seeing a convergence of technical factors that could signal a major move. Our veteran analyst Rick Petticelli, with over 20 years of trading experience, has identified 5 critical reasons why TSLA might be gearing up for a bullish run. Plus, we've got an exclusive Nasdaq signal that could confirm this setup, but more on that later. If you're ready to potentially profit from this Tesla trade setup, hit that like button and subscribe now. Now let's see what the charts say.
Thank you, Darren, for the introduction. So let's get to the chart of Tesla and our analysis, the 5 key reasons for a potential swing buy entry. So first up, we have a weekly chart, and we're looking at a downtrend line with multiple touches. That's been in place since November 2021. And recently there was a downtrend line break in early July, but that trend line break didn't last too long. The price action dipped back below as Tesla's forming its current basing pattern, which is 9 weeks in length so far. So what we're looking at first up is, of the 5 key reasons for a potential swing buy entry, is the break of a longer term downtrend line. Now we're looking at Tesla. If we can focus on the past few weeks here, the price action dipped back below this trend line, tried to reclaim it a few weeks ago, stalled, tried to reclaim it last week and stalled. So far this week, the price action is open above the open from the prior week and is basically trading in last week's wick, which is the line here. This is the real body, the open and close. The wick is this thin white line here. So the price action is currently above the downtrend line, but it is only Wednesday, so we still have Thursday and Friday sessions to go. But so far, so good. So we have the price action reclaiming the downtrend line. However, until the price action can take out this prior high, we won't have an actual confirmed downtrend line break in place. So we have the downtrend line break here, but then there's sideways action. Had the price moved straight up from here and not looked back and taken off, that would have been a confirmed break. But the price action only went up for a week or two and then paused and pulled back in. So that once the price action overtakes that initial thrust up here that failed, that would be confirmation of the downtrend line break. All right, so back to the daily chart. And on the daily chart, we're focused on the recent basing action here, the 9-week base. The base is 33% deep, which is fine. And the lows of the base basically held above this bullish consolidation from earlier in the year. And for the most part, there was a dip below the 200 AMA for a few days, and then the price quickly recovered back above. So that's a nice little shakeout below the 50 and the 200 MAs, with the price recovering pretty quickly. That's a positive sign. So we have a 9-week base, 33% deep. We have the price action holding the 200 AMA. We have the 50-day AMA crossing above the 200 AMA, which is a positive sign for the momentum in the longer term. You know, the 50 back above the 200, and the 200's flattening out, and eventually that will turn up down the road. And a constructive basing pattern is what we always want to see after there's a powerful advance. And that's what happened here in NVIDIA. Is it ripped about 50% higher in just a few weeks, and it gave back most of that. But if we were to go back off the absolute lows here, it was closer to it was a 95% move. So pretty strong advance from April to July. So a good base here is something that will allow the price action to consolidate, build up some energy, and eventually act as a springboard on a breakout to push higher from here and resume its uptrend. And within the base, we also have the price action clearing the downtrend line, however you want to draw it, right here, or maybe even incorporating this high here. We have a downtrend line break. We also have higher lows in place right here and in here. So we have the price action trending higher. And the only thing that isn't ideal right here is that the 20 EMA is still below the 50 EMA, but this is early in the base, or it's early in the action here, in that we're still kind of in the lower half of the pattern. And eventually, if the price action holds, we'll see the the price push up to this 249, 250 area, and then we'll see that 20 EMA start to cross above the 50 MA. So we have Tesla reclaiming the 50 MA on Thursday on a pickup in volume, heavier than average volume. And then we have that immediate rejection. And we had the same type of scenario play out in late August with the price reclaiming the 50, and there was a rejection, a pretty ugly one, within the next few days. And then the price bounced higher, but notice how that low didn't hold up, and then the price action had to pull back in. So far, what's different about this rejection, we have the close above the 50, then the immediate rejection, ugly reversal, a bearish engulfing pattern. We have the price holding above the low of that ugly reversal day for the past few days, which is a good sign. So it appears that this was more of a shakeout than the start of another wave down. We also have the price action reclaiming the 50 MA on a slight pickup in volume on Tuesday, then undercutting Tuesday's low and touching the 20 MA on Wednesday and reversing back up, closing above the prior day's high, an outside day on a pickup in volume again. So another positive sign here. Tesla's looking like it wants to reclaim the 50 MA. For aggressive traders, the reclaim of the 50-day MA can be a reason to buy or a reason to put on some exposure. But then we also have prior swing highs that the price action must get through, which could also act as entry points on strength. Alternative entry points could be pullback entries if the price action were to retake this 238, 240 area, but stall at this gap fill and pull back in to a rising 8-day EMA. That could be a potential entry down the road, but much will depend on market conditions. If the Nasdaq explodes higher from here, maybe Tesla can rip with the market and test this 260 area before taking a break. If the Nasdaq goes up for a few days and struggles, then we might see that pullback in Tesla to the 8-day EMA. So much will depend on how the market plays out over the next week or two. Next up, we'll reveal a crucial Nasdaq signal that could confirm this Tesla setup, potentially increasing your trading edge. But before we dive into that crucial info, let me quickly share how you can consistently catch potential swing trade setups like Tesla before they happen. The Wagner Daily Pro delivers you expert analysis, actionable trade plans, and top-notch trader education daily. Don't let profitable opportunities slip through your fingers. Visit MorpheusTrading.com, click Stock Picks, and join the MTGTribe now. Now, as promised, let's talk about that crucial Nasdaq signal that could confirm the Tesla setup. Here's what you'll need to look out for on the Nasdaq. Wednesday's action was solid in that it reclaimed the high of last Friday's ugly sell-off, a wide range down day, and reclaimed the 8 and 21-day EMAs. Whether or not the price action can push through the 50 and the swing high, we don't know. So what we don't want to see in the short term is the price action close back below the 8-day EMA and then take out the low of the day that closes below the 8-day EMA, as that would be a sign that maybe there's more selling coming, that we could see a potential Tesla even the 200-day EMA once again. So we'd like to see the price action hold above the 8-day EMA on a closing basis in the short term. All right, MTG Tribe, let's wrap this up. We've identified 5 key technical factors pointing to a potential swing buy for Tesla, and they were breaking the longer-term downtrend line, forming a 9-week base, holding the 200-day MA, setting higher lows on the daily chart, and finally reclaiming the 50 MA on a pickup in volume. And the reclaim of the 50-day MA is a potential buy signal for aggressive traders looking for Wednesday's low to hold. Remember, these insights could be game changers for your trades in the coming weeks. Apply them wisely and always within your risk management framework. If you found value in this analysis, build your trading education by also checking out the hand-picked video displayed on your screen right now. Don't forget to comment below with your thoughts on Tesla's recent action. Are you bullish or bearish? I'd love to hear your thoughts. Remember, in trading, the learning never stops. Keep pushing, keep growing, and always trade with confidence. Until next time, trade what you see, not what you think.